What is up, YouTube? Welcome back to Stocks by the Numbers, and today is Wednesday, September 27th. We're at the midweek here. We're approaching the end of September, and obviously, looking around here just at the overall environment, what you can see is all major indices have overall been chunking down for the last several weeks. I obviously called that. I was a little early because the whole time that market was just pumping up to these BS levels during July. That's when I was calling for the big pullback and the big correction, and it is now beginning. But also, more importantly, I made a video saying if the market is going down, you don't know what to buy, click here. And I spoke about playing puts on the major indices. I spoke about how when these treasury yields increase, something like the 20-year, see, it's been climbing like crazy. Look at that, basically since April. But even if we go back 3-month chart, look at that. Just from September alone, going from sub 4.4, now almost at 5%. And I said when this rises, you're going to have TLT is going to decline in value. And you can look and see what happened here. I put this next level that it was going to pull back to at 91.85, I think at the time. Yeah, it was like over here, like mid-90s or something when I made that video. And as you see, as the 20-year has consistently increased, TLT has been dropping down. So again, TLT puts would have been phenomenal. We come back, we look at the VIX. I said, if you don't know what to buy, just buy the VIX. And look, you can see, look, September 1st, the VIX was down at 13. Now it's at 19.5. Okay, so just keep that in mind. All of your other positions probably went down over this same time frame. However, if you just bought the VIX, this position would currently be up about 50% for you. I also mentioned VXX, which tracks the S&P 500 volatility. And as you can see, look at the chunks up there, just as of late, going from about 20 to north of 25. There's an excellent hedge play, and that's what I mean. A situation like this, if you bought the calls, obviously it worked out very well for you. But also, if you simply just bought VXX, that position is up 25%, while some of your other positions may be down, 5, 10, 16%. So this is what we talk about when we talk about hedge positions. But again, that's not even really the point of the video. I wanted to do an update real quick on Coca-Cola. Ticker symbol KO. There's a Dow component, as you see, really been sliding down during this time frame, right? Because also, remember, it's a Dow component, so as the Dow chunks down, it's going to go down with it. So right now, KO, we're looking at 55.85. It's down 69 cents, about 1.2% here on the day. And as you see, it's less than 2 points now away from the 52-week low there of 54.02. Now, while the numbers do look more attractive, it could potentially continue to sell off as well. However, overall, just like I said in a video on this like 9 months ago, I did it at the end of December when I took a look, overall, I still do like Coca-Cola because you just cannot deny the product. And they're constantly expanding, and, revenue is just consistently increasing, the footprint is constantly growing, and it's been doing so for well over 100 years at this point. So that's why a company like this, all you really want to do, see, it was like hanging out up in the 60s here. I'll pull up like a 1-year chart. See how it was hanging out, bouncing around like very high 50s, going to like low mid 60s. It was bouncing around that range for a while. Now it's on sale, right? It's up $56. So not necessarily saying that this is the ideal price for you to get in, because of course it could continue to keep dropping another point or two, especially if the markets are in a correction mode, right? If the Dow starts chunking down 300-400 points a day, 3 out of every 4 days moving forward, yeah, it's going to take something like Coca-Cola lower. I mean, it's on the Dow, so it's going to lose value as the Dow goes down in value. But looking at some of the numbers here, we have a market cap, we'll call it about $240 billion. The company's paying a dividend yield about 3.25%, not too bad. Right now, sitting here with a PE of a little over 23. And as we see on the EPS side, just doing phenomenal for the last several quarters. And you look over here annually, I mean, just the consistent increases in revenue here, north of 34 billion up to 37, pulled back to 33.03, and even that year, 2020, when everything was locked down, they just slightly missed estimates too. So you can't even bash the company when they had a quote unquote bad year. And the profit margin here, look at this, just maintaining above 20+% like it's nobody's business. 2021 jump in revenue up to almost 39 billion, and now 2022 almost 43 billion, right? So this is what I mean. This is why when we pulled up an all chart last time we looked at the end of December, I mean, just look at that growth. I mean, it's just undeniable. So basically what happened is, where was it? Yeah, it was like back here. It was like December 28th or something like that. Stock was like 64 and change. And again, overall, I did say I liked the company. At the time, now they were probably trading like 7-8 times annual revenue. So I may have hinted that, of course, it could sell off. But, overall in the long term, I mean, to own shares of a company like Coca-Cola, let's be honest, over the long term, we could do worse, right? So Coca-Cola, brand name company. And basically what we're seeing here is, see, if you go back to these lows here, the end of 2021, and you got your low there in October of 22, and now you see if it cuts through, now we're slightly below it. So now I see one of two things potentially happening, right? Because here in the short term, you could say that we could potentially stay inside this range, which means that it should technically bounce and try to get back above this line here. So potentially in the immediate short term, if you want to try to do a quick scalp trade and just play that on the run here above 56, understandable. But I have a feeling that they might continue to drop it down. And also I'm saying that because I think that the Dow is going to keep dropping down, right? So this is what I mean. With the company trading, this is why I say, when a company could sell off, you're better off most of the time just staying away and waiting for a dip and a sell-off to happen so that you can come in and scoop it up at a discount, right? So if you didn't want to buy Coca-Cola up here at 60, obviously, and you waited, now you can buy it down here in the 55s. But again, going back to last year, about 43 billion in annual revenue, and we got 240 billion, so now they're still trading about 5.5 to 6 times annual revenue, which of course could potentially go a little bit lower. And when we pull up this long chart, so this line, let me see. Yeah, this line was running along there, going up to that low there in March of 2020. So if we pull it up like that, and you can see if it does potentially ride along this bottom trend line here and come down to the bottom of the range, as you see, you're looking at about maybe like 53.5, right? So you still potentially could have a little bit of a drop here, about 2.5 points, in my opinion, happening inside of the next week or so. But in my opinion, I do think it's getting ready to bounce soon, especially if you look at the RSI numbers and whatnot. But again, if I was piecing my way in here, which I'm assuming a lot of you longer-term investors are, right? So even if you bought back there, several months back, and you're in at like 63, 64, chances are this is a position that you're consistently adding to. Ideally, you would anyway. So probably on the way down, when it hit 60, sub 60, you may have added more. And that's what I mean. Now it's down here at 56. And this is why, when you're trying to invest, especially for the longer term, if you have a decent job or decent career, or also on the flip side, even if you have just something, very simple, but you're able to have some sort of savings, some sort of excess from that income every week or 2 weeks or every month, whatever it is, that's why a situation like this, these are the types of situations that you add to consistently over time. Right? So you first bought shares up at, 64, and then it continued downward. You bought more shares at 59, and it continued downward. And, now it's down into the mid-50s, potentially going to the low 50s. So when you have a couple of bucks, you add to it as well, right? So now your cost basis is, mid to high 50s instead of that initial 63, 64 it was when you first started buying. Plus the whole time they're paying you 3% a year for you to own it, right? So you're adding to more shares as well if you're doing the drip, of course. DRIP stands for Dividend Reinvestment Program. We speak about compound investing all the time, and that is why when you look at a chart like Coca-Cola, they say that one share of Coca-Cola at IPO today is worth over $5.5 million. One share of stock is worth over $5.5 million. So that's why, I mean, obviously that took a hell of a long time, but overall, this is why we talk about compound investing, because all it really takes is time. So if you're someone who's trying to turn a couple of thousand into a couple of million, first of all, you really shouldn't do it that way, because you're probably going to lose it more than you're going to make it. And also on the flip side, again, if you were just consistently adding to a position, a brand name like this, over time, over the years, over the decades, it's going to pay off phenomenally well for you. And history has shown that. But again, Coca-Cola could really drop down, but I really feel that it's going to bounce, right? Of all the Dow components that could be viewed as overvalued, I mean, I just have a feeling something like Coca-Cola could bounce, because again, even if we enter a recession, or the economy gets tighter, or inflation just continues to climb, this is one of the cheaper rewards that people give themselves, right? You buy a soda with your lunch, or with your dinner, or on the weekend you have soda for the kids and the family and whatnot. So, or hey, if you're an alcoholic, right? You like to drink a lot of rum and stuff. Hey, why not? Now you get your rum and Coke and you go to work. So this is what I mean. I feel like something like this, it's a cheap reward for everybody. So that's why something like Coca-Cola, like, yeah, it could go lower, and of course you could buy the dips, but over time, as we show over the years, I mean, it's probably going to continue to climb higher. But switching over here, because I wanted to look at stock charts very quickly, because I wanted to show you now the stock is well below the bottom Bollinger Band here on the daily. It's really been chunking down, which means, in my opinion, it's ready, and I don't want to say necessarily for a reversal, but it's just ready to calm itself down and either flatten out or rise from this level, in my opinion, right? It has to gain a little bit of life back. And as you see, the MACD has completely slipped off, going back since the beginning of August. As we see, the stock broke the 50 and the 200-day moving averages and just consistently sold off and chunked down. But look at the RSI now on the daily, sitting there right around 26. Now, of course, at certain times, it has been that low and even lower. So we can't necessarily use that as a huge indicator. However, at the same time, seeing that it did dip down and then, of course, rebound, chances are, even if we get in here, and as I said, it does drop like another $1 or $2, and we may be early, chances are, at the end of the day, we will end up being correct, in my opinion. Switching over here to the weekly, random ad, and that's what I mean. We're seeing a similar situation here, right? So the RSI is sitting at 33, and as you see, basically the lowest it's been going all the way back to October of last year, and then not seeing that level before that as of late, going back to the middle of 2021. But right now, again, RSI sitting at 33 here on the weekly, so it could, of course, come down and test that benchmark of 30, and if it does continue to chunk down, then you could have a potential meetup here with this 200-day moving average of 53.24, which, as I said down here, if this immediately comes down, yeah, you're looking at like 53.5. So that's why it could potentially drop down and touch those levels. Of course, we want the ideal prices and times. And if you were looking to play it, what I would say is, again, this longer-term support level that we see, that I drew out here for you. Now, as we see, it is below that level. Actually, let me make it a different color, because now it's getting a little out of control here. We'll make it purple. And now if we zoom in here, yeah, you can see how it just kind of dipped below that line here, about 11 o'clock this morning, tried to retest multiple times, and now, as we see, the Dow markets were down much more, and now they're kind of chunking up now, so KO is now back above this moving average. So, in my opinion, it's going to be where it closes in relation to that trend line. Again, I'll back it up for you. Okay, trend line going from the bottom in December of 21 and October of 22, and now we are slightly below that trend line. So that is the mark that I would watch, because if it does close below that trend line, it could potentially continue to drop down into the 53.5 range that we spoke about. If it closes above that trend line, then you could potentially see a run up to the next level. Here would only be about maybe like 56.5. So this is what I mean. Right now, I mean, it could be a trader situation if you want to play it on the close today, whether you want to step in on some calls or some puts. But overall, I just feel the growth of Coca-Cola cannot be denied. And even though it may be down a few dollars technically from the last time that we looked at it, at the end of 2022, I still have very high conviction in Coca-Cola. Again, as we said, it's a very cheap reward. It's a nice treat that most of people around the world enjoy and look for, on a daily or weekly basis. And again, if times get rough, the few things people are going to enjoy, well, the few things that people are going to require, I should say, are going to be, food, shelter, and that's what I mean. Something like a cheap treat, like a Coca-Cola, every week or two when you have to go food shopping. Those are going to be the small indulgences, and that's why we talk about, usually during a recession or a depression, something like chocolate and candy sales may increase, right? It's that little treat, that little escape to something positive while you're surrounded by a world of negative. Placing a couple of dollars down on a bet at the track, or doing a DraftKings or something like that, or splurging once a week for a little bottle of liquor to take the edge off. And that's what I mean. That's why we talk about these tiny treat companies and these gambling companies and these alcohol companies. These technically, in my opinion, are the real defensive stocks, meaning, of course, regardless of what the economy is doing, they are, probably going to continue to do well. And of course, more importantly, even if the economy does get rough, they will pretty much maintain their business, right? Something like a PM, Philip Morris, right? Regardless of what's going on, people are going to continue to smoke. And also, if times do get worse and more rough, then more people might start to smoke. So, right? So, you just got to think like that sometimes. You kind of got to think outside the box. I wouldn't advise you to, go on like Yahoo Finance every morning and like let that kind of give you the gist of what the market is doing. That's really not the way to do it, because in my opinion, I feel like a lot of those headlines are out there strictly to potentially mislead you and have you feel one way when there's actually something else going on. So again, I know a lot of you are working, you have your jobs, you have your careers, you have your families. I know that, time is very valuable, and sometimes you can't sit here and review all of this stuff. But if you start to understand what's going on in the economy, okay, rates are rising, so now, okay, we're seeing bond yields go up, and now we know when bonds go up, we know stocks go down, so overall sentiment should be, basically down. And, if I'm going to buy a company, it's going to be a brand name company like a Campbell's or a Hershey's, and I'm going to wait for a nice dip like we're seeing today, and I'm going to step in, I'm going to buy it at a discount. Right? You should only be looking at companies that have good growth and stable revenues and, just sold off, and you're able to, come in and scoop in, buying things like gold and silver to hedge yourself in case the dollar begins to start dropping. I mentioned months ago, I think it was going back to like the beginning of August, middle of August, so like 6 to 8 weeks ago. Oil was at like $77, $78 a barrel, and I said this was something that, in my opinion, it had bullish momentum and it was going to continue upward. And now, as we see, I mean, it was at 89, 90 for a while, and now as we see, it absolutely chunked up today, over 3.5%. It's at almost $94 a barrel, and chances are it's going to go to $100 a barrel, right? So this is what I talk about. If you understand the overall sentiment, all you would have had to do was watch my video, listen to what I was saying when, I was talking about rates rising and commodities potentially going up in value, right? And then all you do is you find something like USO, United States Oil Fund, which, as you see, has been absolutely climbing over the last several months with the value of oil going up per barrel price. So this is what I mean. That's why, we see the momentum. We make a couple of dollars if we want in the short term, then we take our profits. Then when we see it reversing and dipping down, we can step in again and buy at a discount and step in and buy some USO calls out of the money a month or two out. And boom, you guys would have been making bank. So this is why sometimes you have to take a step back and try to piece together everything that they're showing you and everything that they're telling you, and kind of try to understand what the overall longer term view may be. Because I understand you all may want to trade and make money every day or every week, no matter what. You got to make, $500 a week in your trading account or whatever. And I can appreciate the fact that you want to give yourself that type of daily or weekly goal to, secure growth for you and your family. I totally understand that. However, again, if I wasn't able to guarantee you returns every week, but if I told you, play something like USO calls out a month or two away, be patient, and, I have like a 95% high conviction that this is going to work out and you're going to make a decent penny. What's going to happen is, because you're going to understand the overall view and the overall picture of the economy, you're going to feel not only more confident stepping into a position like that, but probably more willing to put even more into the position. And even though you may not be hitting your daily or weekly goal, at the end of the day, at the end of the run, when you do take your big, big profits, it's probably all going to work out at the end of the day. And the best part is, you didn't have to worry and stress about it every day, because in the back of your mind, you basically knew what was going to happen. And in my opinion, that's the way you should be investing. And I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Like the video, thumbs up, algorithm, share the video, helps me get more eyes on the channel. Subscribe to the channel. That is our handshake agreement. I will do updates on companies like Coca-Cola. I will bring you a situation like Campbell's. Hershey, I called out in the Discord a couple of days ago. Stock was at 212. I called out puts. As you see, consistently dropping down to the low 200s now, consistently hitting new 52-week lows. So there's money to make in the long term and in the short term. And, I'll make videos about longer term plays, and I'll post any potential short-term plays that I like in the Discord. I'll do all of that for you guys. All I ask, do me a favor, push the subscribe button. That is how you help me help you. That's our handshake agreement. But moving forward, more importantly, like I always say, I understand that markets are rocky and they're volatile and they're very uncertain. So I do want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. Catch you in the next one.